Hi everyone, hope you're all doing well, and today we'll talk about the free stocks to buy February 2021 edition, and this is where I talk about the three companies, US companies, that I'm looking to buy the most in the month of February. So I'll go through these three companies. Two of them are brand new companies that I didn't have in my portfolio before, and one of them is only about a month old, and I'll try and break them down, give some bullish cases on why I think these are going to be very successful and everything like that. So if you could smash the like button. This is not a video that normally does pretty well, so I mean I'll give you a challenge of over 300 likes if you can. See if you can do it. You smashed the UK free stocks to buy, so that was absolutely amazing. Thank you so much. And we'll take a look. So my first company is a brand new company to my portfolio, and this is one that I've actually been watching for a very long time. I think I've been watching this company since it was about $200. Now the company is now over $1,000, which is Shopify. And this is a company that, one thing that I've realized, every year I like to develop on something as an investor, and 2020's target was to be a bit better at taking profits, trimming positions, being a little bit more active. Even as a long-term investor, when companies do well, there's nothing wrong with taking a little bit of profit and then you can go invest that into a new opportunity. And that's something that I've really tried to develop in 2020. Going into 2021, my kind of new target is not to worry too much about valuations on growth stocks. Now, one of my biggest problems is that I see a growth stock that I think is absolutely amazing, but then I look at the valuation compared to, maybe this year's 2021's numbers, or maybe I look at valuations of what 2022 could be. And don't get me wrong, sometimes that's led to some amazing gains. I've been able to buy some really good growth stocks at really cheap prices, and I've done really well. At the same time, it's kind of left me to miss out on some companies that have gone up absolutely huge. And the one thing that I'm going to try and do in the year coming up is try and plan how successful these growth companies will be in 3, 4, 5 years time, and not worry too much about the valuation right now. And that's what I'm trying to do. I'm trying to look at more revenue and profit 3, 4, 5 years down the line, comparing to valuations right now. I mean, don't get me wrong, sometimes it's led to some amazing returns in the stocks, like Pinterest, Skills, for example. But at the same time, I could have bought a few companies that have then gone up even a lot as well. So that's one thing that I'm trying to figure out. And Shopify was one that I could have bought ages ago, and I didn't because I thought the valuation was too much for the next kind of 1 or 2 years. But then I would have got it a lot cheaper. But Shopify right now, I'm looking at this company and I'm thinking, what can this company do now in 3, 4, 5 years? And I don't want to miss any more gains out on any sort of companies like this. And I look at Shopify and I'm thinking, well, generally, what do we think about Shopify? Well, the area that it's in has always been dominated by Amazon. Amazon is the number one player in this sort of industry. And what if we had a company that actually could compete with Amazon? The last kind of company that was was able to do that was like eBay. And, eBay is nowhere near against the standard of Amazon. And Amazon's kind of, led the e-commerce space by quite a lot. But what if I said to you that we actually have a potential for another competitor to Amazon? And it could be Shopify. Shopify could actually challenge Amazon. Now, the great thing with Amazon, for if you're a seller on there, is that you get access to so many people that use the site already. But the problem is that you are just competing pretty much against a load of other sellers having your product, and it's a tough place, And the other thing that's really difficult now is Amazon are actually pushing their own products that they own on the site as well, and they will prioritize them higher up on the listings. Just for example, I've got a tripod that this camera is on right now. There was 10,000 tripods for sale, but you know which one was at the top? It was the Amazon Basics one, and that got the top listing. And then you have all the other sellers that you're competing against, and that's a tricky thing for sellers on Amazon. There's no real loyalty there, and that's it. You kind of put your products on Amazon and you hope yours gets picked instead of all the other ones. But Shopify is a game changer. You have, as well as that, you have quite expensive fees on Amazon, and Shopify you will have fees to set up a site. But Shopify is a complete game changer because you are able now to have your own brand. So if you go on Shopify, and this could be people that sell on like Amazon or eBay, or even if you have a store and you want to get online, a quick, easy way to get online is you go to Shopify. You pay a monthly subscription on Shopify, and you're able to create your own website with your own branding, and you could potentially have the little advantage of having the branding there, a bit of loyalty building, rather than competing against other listings. And that's the amazing thing with Shopify. If we have a look at Shopify here, one thing that is great, you have payments, and I think what Shopify have just introduced buy now, pay later. So that's another little bit that will help them going forward. So you got payments on Shopify. You've got marketing, so you can able to manage your advertisements on Facebook. I think they've started Pinterest. They've started doing, I think, TikTok now. So you get the marketing side of it. You get analytics, so you get all the information from there. You've got apps, so you can design an app through this. You know, that's something that you wouldn't be able to do on Amazon, for example. You've got inventory and fulfillment. So that's something that's new to Shopify. You know, you've got Amazon where you've got the warehouses, and as a seller, you can just basically, you know, if you start building up your website, then basically instead of having you storing all your products and maybe getting a warehouse or a lockup, or, you know, the spare room in your house taking up all your parcels, you can store them with Amazon, and Shopify doing the same thing. It's the reason why they've just took a little bit of debt on recently, but it's also another good income stream for Shopify. Order management and also shipping. Now you think about Shopify and think about all them roles that you would have to have in your company. You know, someone to manage the website, someone to manage the marketing, someone to manage your inventory, your shipping as well. Basically, Shopify can do all that for you, and it's all in one place. And the big thing about, like I say earlier, comparing it to something like an Amazon, is that you have this all on your own storefront. You know, when you're shopping on something like an Amazon, you're just competing against everyone else. But where you look at a Shopify, you have all this ability to design your own website and to have that little brand advantage compared to something like Amazon. And, you know, you could have all them kind of sellers that are on Amazon move to something like a Shopify and set up a Shopify site, and that could give a little advantage to you as a branding and marketing point of view. And also, if you think about all these companies at the moment that basically might not have had an online site, they can now have an online presence, and that they can link that up to the shop, and that is something that is pretty amazing. So you've kind of got the boom of the e-commerce growth here, and you've also got the classic kind of, you know, brick and mortar stores that can now set up a Shopify really easy. You know, it don't take you long to set up a site. It's quite easy to customize it yourself, and yeah, I mean, I think Shopify, when we look at the company, is something like a 100 billion company. Like, if this was to get to the size where it can compete with Amazon, you know, Amazon's over like 1.7 trillion. Like, that shows how big of a company that Shopify could be. And I mean, I don't think it'll ever get to a size of like an Amazon, for example, but realistically, what could Shopify come? It could quite easily become a 300 billion company, a 400 billion company. And that's why I'm paying up for the growth on this one. I don't normally pay as much growth up as what I am doing with Shopify, but I'm looking and thinking, over the next 5 years, Shopify could actually, you know, double, on the share price, double, maybe triple, maybe even a bit more than that. And yeah, I think that when you actually have something that could on the lines of Amazon and compete with them, I think that's quite an interesting pick. Now, we're just going to dig into the financials of Shopify really quickly. Just looking at the financial point of view, you can see that the company is now a profitable company. The profit is going to scale up really quick. And when you also look at the revenue point of view, like, the revenue is still going to grow at a very, very healthy rate. And it won't be too long before we're talking about a company that is going to be like putting in, you know, 10 billion worth of revenue. And when I start looking at the companies, a company in that point of view, and then the valuation, this has a lot of potential to go up even more than what it is right now. And then just on a balance sheet point of view, very, very healthy. It can build up its fulfillment centers. That's what it's trying to do right now. And it has taken on a little bit of debt. It's still, I mean, I was kind of like, it doesn't really need to take on the debt when it's got 6.1 billion in cash, but hey, we'll let it go. But the debt is 750 million, and that's just debt that's only recently come on to help build out these fulfillment centers. And yeah, I mean, the fulfillment centers are another leg to the company, as well as having the e-commerce growth and everything like that. You know, it gives them the income now of, you know, the people that use it for storage, and also, you know, the shipping side of it. So yeah, I think that's a great move by Shopify. So I think this is generally another competitor to Amazon, and it makes me really excited. And I think that this stock is a long-term hold. You pay up a little bit for this one, but, you know, to get what could be the next, you know, Amazon at a very, very cheap valuation, in my point of view, like this, for me, this easy could be a 500 billion company in a few years, maybe even more than that. So yeah, I was very keen to pick up some shares in Shopify. So number 2 is a iGaming stock or a gambling stock. Now you guys know I'm a big fan of Gang, and Gang has performed absolutely amazing. But this industry in general, I think, has so much potential because for you guys that don't know, basically gambling is currently not allowed in a lot of US states, and it's just getting allowed more and more and more. And you think about if this hasn't been allowed and then it is going to be allowed, the boom in here is going to be absolutely crazy. And I bought Gang because I thought they were a really good player in it, and the stock is now performing very well. And I want to have more plays in this area, and I was looking and I looked at quite a few companies. Some of them didn't have amazing growth, some of them didn't have amazing balance sheet. I looked at Golden Nugget again and I was like, still can't get over the management. I still can't get over the balance sheet. And I was like, who is realistically the number one player in here? I want to have the number one player in here. And you could argue that they're not exactly on terms of revenue the number one player, but as a brand, I believe they're the number one player, which is DraftKings. And yeah, it's one that I should have really bought once again a few months ago, and I didn't. And I just got to the point now where I was looking at this company and I was thinking, the company's around about 20 billion, and I looked at the industry growth and the growth that DraftKings is going to have, and I'm like, this is going to be a company that's going to be worth over 100 billion in 5 years. So I shouldn't really be bothered about buying it at $60 or $50 or $40. I mean, sure, it would have been a nice gain in the short term of either 30, 40, 50%, but I was looking at this company once again and I was like, this company will be worth probably 5x than what it is right now in the next 5 years. So why am I bothered about a $10, $20 when it's going to be an absolute beast? And I just got to the point where I was like, let's buy it, because I love the industry, I love Gang, I want another player in here. DraftKings is it, and I love DraftKings. I just couldn't get over the share price. And then when I started running the numbers for like 4 years, 5 years down the line, I was like, just buy it, because it's going to be an amazing company in the next 4 or 5 years. Now, don't get me wrong, I do want this to drop. I would love the stock to drop in the next 6 months down to $50, $40, and I could buy heavy. I could even make this my biggest position. So that's something that I am considering, DraftKings, just to let you know. But yeah, I just was running the numbers on this and I was like, I've just got to buy it because it's going to be an absolute beast. So DraftKings is basically involved in online sports betting, iGaming, and I think that the new earnings would be pretty good, but towards probably the Q1, Q2, obviously then we don't have the NFL season and everything like that. Maybe that's when we see a drop in share price. That's what I'm really hoping for. But hey, I think the next quarter should be pretty good. Now, when we look at this, 19 states have active mobile legalization. So this is what I mean. You look at the US where DraftKings is, main market is. You can see the active markets, what's going on, what is nearly there, and you can see that there's still not major coverage in the US. We're still at a very limited market, and over the next 5 years, I believe a lot of these will be going to you'll see more green rather than grey patches on here, for example. And that's going to be the growth. DraftKings has all of this market still to tap up, which will be huge. Now, when we look at US iGaming is the next wave, you can see here, this is the New Jersey, which is one of the newest states to allow a lot of online gaming. This is the market where Golden Nugget has a lot of good share. And you can see here that when you look at the New Jersey iGaming, the growth, you look at the market potential there, look year after year where it's just been building up, and it's absolutely crazy. And once again, this is a comparison of the competition that's in here, and you can see DraftKings, how much of the market it has. I mean, basically DraftKings and FanDuel are pretty much like neck and neck on it. I think DraftKings is the better brand than FanDuel, and if I wanted to buy FanDuel, the problem is that you can't buy that company. I think it's Flutter that owns FanDuel, so you have to go buy a lot of other companies, whereas I just want to get this online company, and I actually think DraftKings is better. Now, the market share and everything like that for the fantasy sports, the sports book is neck and neck, but I think, in my opinion, DraftKings is a better brand, the better company, and as an investor, I want to buy this one. I don't want to buy FanDuel where I get loads of other companies as well. That I think, in my opinion, FanDuel should be a company that went through a SPAC stock, and then that would have been very interesting. But yeah, it just shows you how much market share DraftKings does have, and basically there's only two competitors that have a big market share in this sort of area. And just to show you how much people do like DraftKings, and this is why I think it's better than FanDuel, look at this, for example, look at the app ratings, DraftKings compared to FanDuel, and look at the average minutes spent per session. Once again, DraftKings come out top. So you are getting the number one player in this sort of industry as well. And that's why I wanted to buy this one, really. So let's take a look at the revenue side of it. Let's take a look at the profit side of it. So when we look at the financial side of it, you can see revenue is going to grow at a very healthy rate. And yeah, I mean, if in 2021 it puts in 860 million of revenue, that would be pretty impressive. Now, the big thing that always put me off was how much this company is going to lose money. No, I actually don't think it will be this bad. I think that profit will be a lot closer than this. So on here, it pretty much on Tip of Wall Street, it doesn't project it to be a profitable company until 2025. I think it will come sooner than that. I think a lot of these states, when they build up, we'll see some states come profitable in 2022. And I believe profit will be more towards 2023 or 2024. So I don't think it is as bad as it looks out here. That's one thing that did always used to put me off. But after looking at DraftKings and the numbers they could put in, it seems like it doesn't take too long for states to get to profitability, which is good. But the main thing as well is when I'm buying an unprofitable company, want to see a good balance sheet, and you do get that with DraftKings. There's zero debt on there. When we look at the cash, there's 1.1 billion in cash, which is pretty good. And I'm sure this company as well is it's going to be very easy for this company to raise capital as well. So yeah, I got no problems with that sort of thing at all. So yeah, number 2 is DraftKings. So number 3 is Glu Mobile. Now compare the other two companies, which is Shopify and DraftKings, which I think have amazing potential over the next 3, 4, 5 years. Glu is probably the one at the best value. At the same time, it's got the lower ceiling. So I do believe that Glu is a company that I would sell out at pretty much 100% gain. It's nothing like DraftKings or Shopify, where I think there could be the big deal in the next 3, 4, 5 years. But this company is definitely, in my opinion, an undervalued company, especially when I compare it to the other competitors in here, and also from a valuation point of view, it's a very, very low forward P, which is very attractive. Now, I think this company will do well. It has done very well because of the boom in mobile apps, everyone being at home, obviously not as many things to do, should have a pretty good quarter, but past that I do think it will also be very successful as well. So these guys have a lot of mobile games. There's some more new games coming out in the next year. So they've got 2 umbrella brands at the moment. One's called CrowdStar, which is more targeted towards females, and they've also got one which is called Glu Sports, which is targeted to more males. Now they've got some new apps come out, which is Table and Taste. They've got CrowdStar Moments. They've also got in the Glu Sports, they've got Deer Hunter World, they've got Tap Sports Fishing and Tap Sports Baseball coming out. As well as that, they do own other mobile games that have been very successful. Ones like Kim Kardashian's Hollywood. There's also a Disney game they have, which is very successful. So they've got loads of games that are successful. They've got more games coming out that's going to be successful, which is really good. Now, one thing that really does stand out to me is that they bought CrowdStar not so long ago in 2016, and what was said on the conference call only a few months ago is that they're looking to acquire another company. Now, when we look at the balance sheet, you'll see that they could do it because they have such a good balance sheet. And you look here at the acquisitions they have made previously and how much they've spent, which is 79 million. And then they've got it all the way up to 2.2 billion in lifetime bookings, which is absolutely crazy. This company loves buying companies, and it looks like they're about to do that again this year. And obviously, if they do, and the history they do have, it will be very good. It will help revenue growth as well. So that's pretty attractive from that point of view. So from a revenue point of view, the company normally grows at about 10% revenue. Obviously, it's had a pretty good year because of everything that's gone on in the world. But normally it's a 10% growth company. And obviously, if it does buy someone, that will also help it go up in value. You think about the profit as well. It's just started making profit, which is pretty good. And profit will scale up pretty quick going forward. So it's very attractive on the revenue point of view, very attractive on the profit point of view. And when we look at the balance sheet, this is where you can see, the possibility that they do go buy someone. There's zero debt on the balance sheet, and on cash they've got 318 million, which is pretty impressive. Now, when this company is only worth 1.5 billion, got that amount of cash, pretty attractive from that point of view. So yeah, I think that you got a growing a very cheap company that's growing revenue and profit at a great rate. They're also looking to buy someone. The market that it's in, mobile gaming, is growing huge. Had a very good year in 2020, and I think 2021 it still should be pretty good. So yeah, with the combination of the buyout, new games, the market growth this has, I think it should do pretty well going forward, and I would expect to get probably over 100% return, maybe about 100% return in the next 2 years on this one. So it's a bit more of a shorter hold for me, but I do think it is undervalued compared to other companies in this area. So those are the 3 stocks to buy, February 2021 edition. Really excited about Shopify, really excited about DraftKings. Think they could be major players in the next few years. Also very interested in Glu. I think that's a really good one. I think that's probably the most shorter term hold, but is definitely the most undervalued. And yeah, those are the 3 stocks I'm looking to buy. There's a few more that could have made this list. I'll probably talk about them in a few days' time. I have been buying a few companies, so I'll let you know about that. But if you could smash the like button, I think this could be one of the longest videos we've done for a long time in the channel. If you do want to know when I'm buying these companies exactly, join the patrons group. I always post when I'm buying and selling. If you do want to buy these companies, there's a link to a free trade account and Trading 202 account. If you join through there, you also get a free share, which is pretty good. But yeah, if you could smash the like button, let's see if we get 300 likes. Hope you enjoyed it, and I'll see you on the next video.